Hey everyone, and welcome back to the channel. Today we are diving deep into a topic that has been on every investor's mind, the recent and pretty dramatic crash in the silver market. One minute it seemed like silver was heading for the moon, and the next it felt like the floor fell out. So what on earth happened? Was this just a temporary blip, or is it a sign of something more serious? In this video, we're going to break down the key factors that led to this plunge, explore the ripple effects it's having across the global economy, and most importantly, discuss what you should be looking out for next. Whether you're a seasoned silver bug, a curious investor, or just trying to make sense of the headlines, you'll want to stick around for this. First, let's set the stage. For weeks, silver was on a tear. We saw prices climbing steadily, fueled by a perfect storm of factors. There was rising industrial demand, especially from the green energy sector for things like solar panels and electric vehicles. At the same time, inflationary pressures were building globally, and investors were flocking to precious metals like silver as a traditional safe haven asset, a way to protect their wealth from eroding purchasing power. The sentiment was overwhelmingly bullish. So where did it all go wrong? Well, the primary catalyst for the crash was a sudden and aggressive shift in monetary policy from central banks, particularly the US Federal Reserve. For months, the narrative was that inflation was transitory. But then the data kept coming in hot, and the Fed had to change its tune. They signaled much faster and higher interest rate hikes than the market had anticipated. Why does this crush silver? Because higher interest rates make holding non-yielding assets like silver and gold less attractive. Why hold a metal that pays you nothing when you can suddenly get a decent risk-free return from government bonds? This change in expectations sent a shockwave through the markets. Big institutional money, the kind that really moves the needle, started rotating out of precious metals and into assets that benefit from higher rates. Another huge piece of the puzzle is the strength of the US dollar. The dollar and precious metals typically have an inverse relationship. When the dollar goes up, it takes more of those stronger dollars to buy an ounce of silver, so its price in dollar terms tends to go down. With the Fed leading the charge on aggressive rate hikes, the US dollar surged against other major currencies, reaching multi-decade highs. This created a massive headwind for silver, pushing its price down even further. It wasn't just a silver story, it was a strong dollar story. We also can't ignore the role of the derivatives market. A lot of silver trading happens, not with physical metal, but with futures contracts and options. When the price started to fall, it triggered a cascade of forced selling. Traders who were highly leveraged, meaning they borrowed money to bet on rising prices, faced margin calls. They had to sell their positions to cover their losses, which created more selling pressure, which pushed prices down further, triggering even more margin calls. It's a vicious cycle that can cause prices to drop much faster and further than the fundamental supply and demand would suggest. It's like a snowball rolling downhill, picking up speed and size along the way. So what are the broader implications of this? Well, for one, it's a tough blow for mining companies. Silver miners, whose profitability is directly tied to the price of the metal, saw their stock prices plummet. This could lead to delayed projects, reduced exploration budgets, and potentially even mine closures if prices stay low for an extended period. This, in turn, could constrain future supply, which is something to keep an eye on down the road. For the industrial side, a lower silver price is actually good news. It reduces input costs for manufacturers in the solar, electronics, and automotive industries, which could help ease some inflationary pressures in those specific sectors. For the average investor, this has been a painful lesson in volatility. Many who jumped in near the top, caught up in the hype, are now sitting on significant paper losses. It is a stark reminder that precious metals are not a one-way bet and can experience sharp corrections. This volatility often shakes out the short-term speculators and leaves the market to the long-term believers in silver's fundamental value. Now, for the million-dollar question, what comes next? What should we be watching? The most important factor, without a doubt, remains central bank policy. Keep a close eye on inflation data and every statement from the Federal Reserve. Any sign that they might pivot or slow down their rate hikes could be a major catalyst for a silver rebound. If inflation starts to cool off and they signal a less aggressive stance, the pressure on silver will ease. The second thing to watch is the US dollar index. Is its meteoric rise sustainable? If we start to see signs of the dollar topping out or pulling back, that would provide a significant tailwind for silver and other commodities priced in dollars. Geopolitical events also remain a wild card. Any escalation of global conflicts or new economic uncertainty could trigger a flight back to the safety of precious metals, regardless of what interest rates are doing. Finally, pay attention to the physical market. Watch the premiums on physical silver coins and bars. Sometimes the paper market price, which is what we see in the headlines, can disconnect from the physical reality. If you see high demand and dwindling inventory at bullion dealers even as the paper price is low, it could be a signal that the bottom is near and that physical buyers see value at these levels. It suggests the smart money is accumulating. In summary, the silver crash was a complex event driven primarily by a hawkish Fed, a surging US dollar, and a domino effect of leveraged selling in the derivatives market. It was a perfect storm in the other direction. Moving forward, the path for silver will be determined by the tug-of-war between monetary policy and underlying fundamentals. While the short-term picture looks challenging, the long-term case for silver, based on its critical industrial role and its history as a store of value, remains compelling for many. The key is to understand the risks and have a clear strategy. This wasn't financial advice, of course, but an analysis to help you make more informed decisions. What are your thoughts on the silver market? Are you buying, selling, or holding? Let me know in the comments below. Thanks so much for watching. And if you found this breakdown helpful, be sure to hit that like button and subscribe for more deep dives into the markets. I'll see you in the next video.